Are you guys trying to psychoanalyze the president at this point? I mean, what does an independent research firm do right now?
Well, I think what you try to do is to take it purely from a fundamental perspective. But I think even as we're experiencing, we're having a top-down turmoil from the trade tensions, et cetera, because should we end up with a more heated trade war, then that probably would throw the global economy into at least a soft spot, if not recession. And then what about those earnings expectations that we have for the coming year? I mean, right now, we're only looking for 1.2% growth for all of 2019, and that's well below the 5% when we started the year. So I think the analysts are doing the best that they can by talking to management, getting some guidance from them. So the guidance they're saying is not coming from Washington. The guidance is coming from management itself.
What's your best read now on corporate confidence and business investment? We got a durable goods number, which on the headline looked okay. I mean, there are some complaints underneath, but obviously the Fed has been worried about capital spending. So where exactly are we in corporate America?
I think that we're in a good spot, but we could be in a lot better spot if we had more clarity as to which way the market was actually headed in terms of what the trade situation was likely to be. I think that based on Fed president comments last week, they were probably setting us up for the possibility of their not cutting rates at the September meeting. We had 3 Fed presidents say we really didn't need to do it in July. We probably don't need to do it in September. We had economic data come out stronger than expected. We had corporate profits, particularly on the retail side, that surprised to the upside. So I would tend to say that prior to that tweet, the Fed was sending out trial balloons that they would not be cutting rates in September.
Bruce, we talked here a lot about the uncertainty, both from an investor perspective in terms of how you deal with the back and forth between China, but also from a CEO perspective in terms of how you allocate capital. Is that impacting at all your view of the overall market?
No, it certainly is. I mean, confidence is very critical to a CEO's decision-making process, and certainly the trade situation and what the Fed may or may not do is certainly impacting that confidence. But I would say this, I was pretty impressed with Powell on Friday for 2 reasons. First of all, he hammered home the idea that the Fed was an independent actor. And 2, more importantly, Powell showed no sign of panic. And in my mind, that helps CEO confidence significantly. The fact that he did not panic and did not indicate a 50 or a 70-point increase in the Fed funds level, I think is very significant. So I was happy with that. And if you look at the markets on Friday, as soon as Powell finished speaking, the markets began to firm up. And it was only when China burst in, raising the temperature of the trade tariff situation, that the markets plunged. But the markets were pretty confident in what Powell had to say.